And welcome to my YouTube channel, Phil's Gang YouTube channel. Okay, this will be my fifth installment of why I think the stock market is going to crash, and I'm going to be giving you more evidence. And I'll keep doing this every Friday until the market actually crashes. I don't know the date, but I'll know one thing. We'll know when we're very close. So here's more evidence. First, today, another stimulus. Let's go back and take a look at my chart. Economic GDP growth have not hit 3% since 2005. The first quarter of 2020, we dropped 5%. Then we dropped 31% because of the pandemic. And then we had this big spring back at 33%. They said they were on their way. No, they weren't. We came back with 4%, and it's going to even be worse the next quarter. Here's why. $27 trillion in debt in 231 years. Stimulus, $5 trillion in debt in just 1 year, 2020. Now we're adding another $1.9 trillion. We must not be fooled into believing all this stimulus, just $5 trillion alone in 2020, another $1.9 trillion today. It does not serve as economic stimulus because any dollar that government spends must be removed from the economy, removed from you and me, either through borrowing or taxation, before government spends it. Stimulus should be targeting productivity, which increases the production. It drives jobs, drives wages, which increases economic growth and self-reliance. Instead, Biden, like Carter, Bush, and Obama before him, targeted assistance instead of productivity, and like them, it will fail. This is more proof that the market crash is getting closer. You can see it right here. Let me show you the next proof. Every time there is a crash, we have a big surge, a big market surge. Here it is in 1929, huge market surge, and then it collapsed. We have these big breakouts, and it collapsed. They serve as a very good warning. Again, in 2008, big surge just before the market crash. Here we are. You talk about a surge, a huge surge right before the crash. More evidence. We have all kinds of evidence. Red flags. Too much exuberance, too bullish, newsletters, 85% positive. Are you nuts? I'd rather see a newsletter 85% negative. Fake business news, 85% positive. No business investment. Percentage of gains in short-term periods are incredible. Money supply is unbelievable, keeps increasing. Debt's growing faster than wages, more proof. Credit expansion at the wrong time. Stock buybacks are overtaking business investment. What are you, nuts? There's more proof. Example. 1999, look at the dot-com. Same thing. We had that big splurge, that big move in the market, almost 200% before it crashed. And then it starts moving along. And then again, look at the money supply in both 1999, the dot-com crash in 2008. Again, another big surge in the market, big warning, just like back here. Market's going to crash, and it did. Now look at where we are in February. We had that big crash in February. They printed more money again for stimulus. And look at this. As they push the market up, the QE bubble up, it's been going up, and we're going to get that same top of the bubble, same top, that same surge. We're going to be getting it up here, but it's being expanded longer than back here, because back here we didn't have QE. We didn't have monetization of debt. We didn't have that tool. But what's going on right now? Earnings are going down, GDP growth is contracting, and all they care about is the bubble. That's all they care about is the market. That's the reason for the stimulus. It doesn't help Main Street. It helps Wall Street. More proof. I'm going to show you how it works on our charts. Next week, I'll get more into the charting. If you take a look at the chart, you start seeing that we have, when the market starts surging, it starts running really hard, you're going to see on the upsurge, we're going to have a lot less volume than the down surge. When you start seeing more down volume on our charts than the up volume days, you know we are in trouble. And also, on my chart, that I have another chart that I've designed that even gives me even more of a hint. It will turn yellow, giving me an advanced warning. A color is changing. Look at this, right before this drop right here. Again, remember what's going on. We got more down volume than up volume. That is a big signal. The crash is happening. Look at this. It works. It's unbelievable. I'm going to show you this next week. We'll get more into that next week. Please hit like, hit subscribe, and please share. Do that for me. And next week, we're going to have more proof that we're getting closer and closer. Stimulus is not the answer. No, it's productivity. That's the answer. But regardless, we're going to make money during the surge, and we're going to be out of this market in time, and we're going to make money in this market when it collapses by shorting it. But let's keep on with the proof. Let's stick to the proof. It's always the proof. Follow the money. Follow the proof. See you on the charts next week for more proof.